All right, let's get right into it. The price of gold has been on an absolute tear, smashing records and leaving pretty much everyone asking one simple question: what is going on? The precious metal has just dominated the financial headlines. Its rally has been so powerful, it's making everybody, from central bankers to everyday investors, sit up and pay some serious attention. And when we say records, we really mean it. The price of gold recently just exploded, briefly touching an all-time, honestly an eye-watering high of $4,888 an ounce. Wow. That's a number that would have seemed totally out of reach just a little while ago. Now, what's really wild about this is just how fast it happened. We're talking about a 65% surge in just 12 months. That's a kind of performance that has left most other big investments, from stocks to crypto, basically trailing in its golden dust. So that brings us to the big question, the core of our explainer today. Is this meteoric rise just a classic bubble, a speculative frenzy that's just waiting to pop? Or is gold signaling something much deeper, a really fundamental shift in the global financial system? We're going to break down both sides of that argument for you. First step, let's look at the bull case. What are the powerful forces that have been pushing gold up to these incredible heights? Because the story here, it's become a lot more complex than just, simple fears about inflation. So for decades, right, the main reason to own gold was as a hedge against rising prices, an inflation hedge. But that whole narrative, it's evolved. Analysts are now calling gold's role a system hedge. What does that mean? Well, investors aren't just trying to protect themselves from their cash losing value, they're hedging against the stability of the entire financial system itself. And this slide really lays out the key drivers behind that thinking. We are seeing absolutely exploding government debt levels. We're seeing record-breaking purchases from central banks all over the world. There's this persistent uncertainty about what policymakers are going to do next, and all of that is leading to a real loss of faith in traditional safe havens like government bonds. So investors are now looking for a golden anchor in what feels like a sea of uncertainty. So really get why this debt matters so much, just look at this chart. Back in 1980, U.S. debt was about 30% of the entire economy's output. Fast forward to today, it's over 120%. The best way to think about it is like a country-sized credit card balance that's gotten so massive that even a tiny increase in interest rates would make the payments totally unmanageable. And that dramatically limits a central bank's ability to fight inflation by raising rates like they used to. This brings us to a really crucial concept: fiscal dominance. It's basically a situation where the government's need to borrow money effectively traps the central bank. The bank can't risk raising interest rates too high because it could blow up the government's finances. And for you, the everyday investor, this means those supposedly safe government bonds in your retirement account, they might not offer you any real returns for a long, long time, which is pushing gold right to the forefront as a true safe asset. And hey, this isn't just some fringe theory. The big players on Wall Street are taking it very, very seriously. Goldman Sachs just recently boosted its price target for gold all the way up to $5,400. And they pointed directly to this structural shift, with both central banks and private investors moving their money out of traditional assets and into gold. But of course, for every bull market, there's always a potential bear case. So what could stop this rally in its tracks? What could possibly tarnish gold's shine? Well, history actually gives us a surprisingly clear playbook on this. This slide lays it out perfectly. If you look back through history, gold has really struggled when four key things line up against it. 1. Rising positive real interest rates. That's when your cash is actually earning more than inflation. 2. A tightening of monetary policy. 3. Strong and stable economic growth. And 4. A strengthening U.S. dollar. When you get those conditions, the need for a safe haven like gold, well, it diminishes quite a bit. So the whole bear case for gold today really hinges on these exact scenarios playing out. The biggest threats to this rally would be an unexpected surge in economic growth, a return to a world where your savings account actually beats inflation, and, of course, a restoration of public confidence in the ability of central banks to manage the economy well. And for anyone out there who thinks gold only ever goes up, history offers a pretty stark warning. Remember after the 2011 peak? The Federal Reserve started signaling that it was ending its emergency policies. Confidence came back to the markets, and suddenly gold's insurance role wasn't seen as necessary anymore. And the result? A long, grinding bear market that saw the price fall by 45% over the next few years. It can happen. So what's the most credible bear scenario? The World Gold Council calls it a reflation return. This is basically a future where all these fiscal policies actually work, and they spark a new wave of strong economic growth. In that kind of booming economy, investors would much rather put their money into assets that grow, not just assets that store value. And that would make gold look a lot less attractive. Okay, so we've got a powerful bull case built on debt and distrust, and a credible bear case built on a potential return to growth and stability. How do we make sense of all this? Let's try to pull these two views together and look at the deciding factors you should be watching. You can almost think of the current gold price as a tug of war. On one side of the rope, you've got a vision of the future that's defined by high debt and sort of a managed decline, where gold is a necessary anchor. On the other side, you have a vision of renewed, strong, and stable growth, where gold becomes more of a relic. The price is really just a reflection of which vision the market thinks is more likely right now. So what should you actually be watching? Well, the analysts at Goldman Sachs have laid out 3 key checkpoints to keep in mind. First, keep an eye on the pace of that central bank buying. If it slows down, a huge pillar of support for the price is weakened. Second, Federal Reserve policy moves. Any surprisingly aggressive or hawkish moves could be a major headwind for gold. And finally, just watch for broad signs that macro stability is returning. The more confident investors feel about the future, the less they'll feel the need to own gold as insurance. And that leaves us with one last, really crucial question to ponder. This incredible rally we're all witnessing, is it really a story about the rising value of a shiny metal? Or is it actually a warning sign about the perceived long-term value of everything else? Our currencies, our bonds, and the very stability of the system they represent? That right there is the multi-trillion-dollar question. Welcome to The Explainer. So today, we're going to dig into a story that's about way more than just a shiny metal. We're talking about gold's absolutely incredible, record-breaking price surge and what it might be telling us about the very foundations of the global economy. Yeah, you've probably seen charts just like this one popping up all over the place, right? Gold prices, they're not just climbing, they are absolutely shattering previous records, just blasting into uncharted territory at a crazy pace. So, the easy answer is always, oh, gold is a safe haven asset for uncertain times. But this rally just feels different, doesn't it? This isn't your typical market jitters. There's something much deeper, something way more fundamental happening just below the surface. And that's exactly what we're going to get into. Okay, so let's get right to it. The big question is, who is actually buying all this gold? And trust me, the answer might not be who you think it is. Now look, individual investors, hedge funds, yeah, they're part of the picture for sure, but they aren't the main characters in this story, not even close. The real engine driving this whole thing is a much, much more powerful and strategic group of buyers. And here they are, the main characters. Just look at this chart. It really shows you the sheer scale of this shift. For more than a decade, central bank buying was pretty steady, But then look what happens from 2022 onward. It's an explosion. We're talking historic, unprecedented levels of gold being snapped up for national reserves, especially by central banks in emerging economies. And let's be clear, this isn't just some simple portfolio rebalancing. Nope. This kind of buying spree on this scale, it's a huge flashing signal of a massive strategic pivot that's happening right now on the world stage. The key idea here, the big term you need to know, is de-dollarization. And what that means is it's a deliberate, strategic move by countries to rely less on the US dollar. For decades, the dollar has been king, right? The world's main reserve currency. Well, now a lot of countries are actively looking for other options. So the natural question is, why now? What's going on? Well, it really comes down to 3 powerful motivations that are all hitting at the same time, pushing this huge pivot away from the dollar and towards gold. Okay, first up, geopolitical insurance. Think about it. When the dollar system is used for financial sanctions, it makes a lot of other countries, well, nervous. Suddenly holding all your reserves in dollars looks like a major vulnerability. But gold is a neutral asset. It's not controlled by any single country. That means it has 0 counterparty risk. And what that really means in plain English is you don't have to trust another government for it to hold its value. And this right here, this is a perfect illustration of that trend in action. This table shows an absolutely staggering shift in how China handles its cross-border payments. Back in 2010, the US dollar was involved in something like 85% of its transactions. Fast forward to 2024, and that number has plummeted to below 50%. And their own currency, the renminbi, has taken over as the majority. This is literally de-dollarization happening right before our eyes. But this trend, it's really just one piece of a much larger puzzle. It's all part of a bigger story about growing instability around the world and a fundamental change in how countries are starting to think about economic power itself. What we're really seeing is this major shift from what you might call traditional economic policy, worrying about things like inflation and growth, to something called economic statecraft. And that's a whole different ballgame. This is where you use economic tools, sanctions, tariffs, you name it, as weapons to achieve foreign policy goals. It's not just about prosperity anymore, it's about power. And all of this geopolitical maneuvering, it's happening while in the background, you've got these absolutely eye-watering debt levels in major Western countries. I mean, when a country's national debt gets this big, you can't help but start asking questions about the long-term safety of its government bonds, the very things that were always considered the safest assets on the planet. Right, and the really crucial point here is that this is not some temporary blip. The sources we're looking at call this a fiscal trap, and it's being driven by some really deep structural problems. You have aging populations in developed countries, which means spending on stuff like pensions and healthcare just keeps going up and up. That creates these persistent deficits, which basically ties the government's hands, making it incredibly hard to manage all that debt. So when you put all these pieces of the puzzle together, it becomes pretty clear. This gold rush, it's so much more than just another commodity boom. It's a signal. You could almost call it a global vote of no confidence in the long-term stability of the financial system we've all known for decades, the one that's centered around the dollar. Yeah, it's pretty clear this isn't just some passing fad. The forces we've been talking about are deep, they're long-term, they're structural. So that leads us to the million-dollar question. What does all of this mean for the future? For the future of money, of power, and of the entire global economy? This quote from Lee Kuan Yew, Singapore's founding father, really puts all of this into a fascinating historical perspective. He says Asia's rise isn't a flash in the pan, but a return to the norm. It makes you think. Maybe the Western-led global order we've seen for the last few hundred years was actually the exception, not the rule. And maybe what we're seeing now is a return to a more multipolar world, where power is spread out a lot more evenly. And so that leaves us with one last big question to think about. In a world where trust in the old institutions and currencies is fading, a world that seems to be fracturing into competing groups, is gold making a comeback? Is it reemerging from the history books to become the foundation for a whole new global economic system? Well, the market certainly seems to be betting on it.